Welcome back, everybody. Today we are looking at Chewy Inc., the American online pet retail giant. This company just released its earnings today, and it was very interesting. And after we look at the company's earnings and financials, we will look at the fair value calculations of this company to figure out if this company is going to make a decent investment. So make sure you stick around, and with that, let's check out Chewy.com. All right, so we're here at Chewy.com, which is the website for Chewy Inc. And as you can see, it's a pretty basic, straightforward online retail company which focuses on pets. They have pharmacy brands, they have food, toys, accessories, things like that you can buy for your pets. This is a fairly simple business model to understand, but I just wanted to make sure that everybody had a chance to see the website in case they were not familiar with it. With their earnings announcement, Chewy did not release an investor presentation, but they did release a shareholder letter, and so that's what we're going to look at today. As I'm sure is pretty obvious, the company's mission is to become the most trusted and convenient destination for pet parents and partners everywhere. I'm sure many people, if they live in the US, have seen these Chewy boxes sitting outside of people's houses, so that's what the company's aim is to do, is to deliver all of these things straight to your door to make your life easier so you don't have to run to the store and buy supplies and food for your pets. In their recently released Q3 earnings, we can see some of their financial highlights are that their net sales were up 8.2% year over year, which is pretty solid. Their gross margin was up by 10 basis points, which is not much, and I would prefer to see something much higher than that, but I won't complain. The company did have a net income of $38 million less than a year ago, and that kind of goes along with the same story we're seeing from all retailers that, consumers are spending less money. So that's not surprising, but it's definitely not a good thing either. This also led the company's net margin to go down 140 basis points below zero. But at the very least, their adjusted EBITDA margin went up 20 basis points to 3%. And now the information that I found most interesting is actually the stuff on the right-hand side, where we can see that they have 20.3 million active customers, but that is down by 1.3% year over year. That's not a completely shocking or terrible change, but for a company that's in its growth phase, we definitely would like to see that number be positive and be, very positive, not negative. So that's a worrisome sign. What is slightly better, though, is that the average sales per active customer was up 13.8%. So that is well outpacing inflation, and that's showing some very decent revenue growth for their customers that are sticking around. And 76.4% of their customer sales are auto ship, meaning that the company just ships the same thing out every month or every 2 months or whatever you ask them to do, and it's just a recurring charge on a customer's credit card. So that would be a pretty stable thing to see, and consumers don't like to cancel things or they forget about things. So I would consider this, pretty good to see that their auto ship is popular and, very, very popular based on what they're showing here. Getting into the business highlights, we can see that Chewy launched in Canada recently. And while I don't expect this to be a massive revenue boost like the United States would be, Canada is still a very wealthy economy. And so we can expect, or should hope to expect, that Chewy is able to drive a decent amount of revenue growth and customer growth in their new Chewy Canada venture. The company did see pretty good Black Friday and Cyber Monday performance, with their new customer acquisition up 40% over their Q3 weekly average. But they did also note that they saw trends return to pre-holiday levels, so there wasn't any sort of boost to popularity. It was just kind of a one-time stint. And finally, as every corporation likes to put it, they're making themselves more agile and disciplined as a company, which essentially means that they reduced their headcount, or, in less nice terms, they laid off much of their staff. I believe this was a couple months ago. They laid off about 200 of their staff. And so that's just the company trying to cut costs. And as we can see, at least on their bottom line, those cost cuts haven't done much to improve the financial situation of the company yet. And following the company's earnings after hours on December 6th, Chewy stock dropped by 8% due to their revenue miss. Now, as I record this Thursday night, the stock continues to drop and it's down about 10% right now. So clearly Wall Street did not like the company's earnings. Chewy reported a fiscal third quarter net loss of $35.8 million. Their adjusted earnings were 15 cents a share versus a net loss of 6 cents per share that Wall Street had expected. And Chewy's net sales climbed 8% to $2.74 billion, which was just below their expectations of $2.75 billion. Now, one thing this article does not cover is that Chewy drastically cut its future revenue expectations for the fiscal year 2024. And that is the main reason why the company is dropping like it is. So before we move on to the financial numbers and check and see what a fair value for Chewy might be, can you please take a moment to like this video and subscribe to my channel? It would mean a ton to me. I have tons of content ready for you guys, and I cannot wait to share it with you. Thank Thank you so much for your time, and let's get into this. Revenues have grown really nicely since 2019, up over 32% per year for the last 5 years. As I did mention, those revenue numbers are expected to flatline and potentially even contract in the near future, but hopefully they can return to this growth following 2024 and into 2025 and beyond. EBITDA has gone from very negative to positive, although it only is positive by $100 million, which is very small considering the fact that this is an $8 billion market cap company. Operating earnings look much the same, being very negative in 2019 and 2020, and they have gone positive, although they're not super positive, and they have flatlined just a little bit. Gross margins have improved every year, which is really great to see, and they have started getting a little more flat, around 28%, but for a retailer, 28% isn't too bad. Operating margins have improved, but they are currently razor thin at 0.2%. Return on assets are very similar, but at least they are positive, and hopefully they can continue to trend in a positive direction. Chewy's annual shares outstanding have grown by about 5 to 10 million shares per year, which shows that the company is continuing to dilute its shareholders, which is not a very shareholder-friendly policy, although it is understandable for companies that are in their major growth phase. Cash on hand and short-term investments have skyrocketed and are currently sitting just under $1 billion, which is a very positive thing to see, especially since Chewy is starting to see some weakness in its retail business. It's going to need that money and those short-term investments to help it weather any storm if the consumer was to continue to pull away. Long-term debt has also grown substantially, but it remains at a pretty reasonable level at just about $550 million currently. And as we can see here, due to that imbalance of investments on their side and their long-term debt, they do actually earn about $26 million in interest expenses currently with these higher rates. But even with very low interest rates, they were only paying about $2 million a year in interest expense, so that is very negligible. Free cash flow has varied quite a bit, which is to be expected, one, because Chewy is a growth company, and two, because it's a retailer, and so certain things like, consumer trends are out of their control. But in general, the company has been positive, which is good to see, and we would like to see this trend to start to get a little bit more stable and continue to grow in a positive manner. Their free cash flow per share is also continuing to grow, so we will hope that the trend continues. And so moving to the PE chart, we can see that for most of Chewy's existence as a publicly traded company, it has traded at PEs that are showing up as negative, and that is because the company's earnings have been negative at that time. And so, instead of showing it as nothing, I decided to at least show it as a negative number. But since 2021, we have seen a constant improvement by the company, and in 2023, the PE did turn positive along with the company's adjusted earnings. Since going positive, its average PE has been 264, which is excessively high, but Chewy is a growth company, so there are going to be higher PEs. Its current PE is about 152, but that number is set to drop quite a bit considering the fact that Chewy is down about 10% after hours. This represents a discount of about 43% to its average PE, although I do want to mention that because Chewy is expecting to have some revenue issues, I would expect to see some PE contraction in the next year or two, so I don't think Chewy will be returning to its average PE anytime soon unless earnings drop really drastically and price somehow magically stays higher. And so when we move to the value chart, this does not look good at all. Currently, my fair value PE is at 15, which is just based on the fact that I don't have a ton of positive data for earnings growth. But even if I set that to Chewy's projected CAGR of 25.65, we will see that there's not a major shift in where the fair value lines sit. And so even assuming a fair value PE of 26, Chewy's fair value is sitting around $3 a share compared to its current trading price of about $18 per share. And even in the forecasts, when we factor in this projected CAGR of about 26% per year, we can see that by the end of 2026, I'm only expecting Chewy to double its fair value to about $6 a share. So even though this company is growing quite rapidly, its stock price is very, very excessively high right now, in my opinion. And so what I really like about Chewy is the fact that the pet industry is set to continue to grow over time. If we think back to the pandemic, all of the pets that were adopted are just, they're going to be around for 5, 10, 15 years. So there's a lot of growth set from that's going to be coming in the future. So I think there's some great tailwinds for Chewy to take advantage of, and that would definitely be my biggest pro for this company. Secondly, I really like how convenient Chewy is. I have personally used Chewy, and they send stuff straight to your front door. You don't have to go out and drive anywhere. You don't have to carry it inside. Well, you do have to carry it inside, but just from the front door, not the car or anything. And as we know, consumers are really trending towards these conveniences. And so I think Chewy is doing an excellent job at creating a sort of brand image that screams convenience and just, hey, this is easy, one click, we'll send it to you every month. And it's as simple as that. And finally, I think the financials of the company are trending in a really good direction currently. This company, of course, is heavily reliant on consumers. And so their financial situation will affect Chewy's financial situation. But the company does continue to get more and more efficient, and if they can continue on that path, I think Chewy will be a successful company. Now, will its stock be as successful as the company? I am not too sure. As I just showed, there is a very, very, very large gap between where the company currently trades and where I deem its fair value to be. Now, I do like to be conservative, especially with growth companies, but from everything I've seen, Chewy is just excessively overvalued, and I'm not sure if the stock is going to go anywhere in the medium term, even if the company does continue to grow and hit its expectations. Secondly, the declining revenue projections that they gave tonight as a part of their Q3 earnings are a bit of an alarm bell. And finally, there's just a major overarching question of how does Chewy plan to beat its more established retail competitors? And I'm not referring to like Petco or PetSmart. I'm more worried about the behemoths like Amazon, Walmart, companies like that just have this massive empire already out there. They have all of the logistical hubs in place. They have the physical locations if you want physical locations. Granted, they probably don't have the same selection of items, but there is no company more convenient on this planet than Amazon. And I think Amazon could just eliminate Chewy if it really chose to. And so on that note, I did actually want to bring up Pets.com, which if anybody remembers the .com bubble in 2000, 2001, 2002, Pets.com was one of the poster childs of that bubble. They were essentially exactly the same as Chewy. They were just an online retailer that sold pet supplies, as explained right here, to retail customers. They were super high profile. They had advertisements all over, like the Macy's Thanksgiving Day Parade, the 2000 Super Bowl, tons of just TV commercials. They were on Good Morning America and People Magazine. But the company just failed to become profitable. Could have been that they were splashing around too much money on all of their high profile appearances and things like that. But my point is, Chewy.com has been tried before, and Chewy.com's name at the time was Pets.com. And the company went bust really, really quickly as soon as the economy turned around and began to affect consumers in a negative way. And so thanks to the Wayback Machine, we can actually see this old version of Chewy.com or Pets.com. Welcome to 2000. I am sure you didn't miss these types of websites. And so with this wonderful image in our heads, I think I've already made it clear that I don't view Chewy as being a very good investment right now. You are able to make your own financial decisions though, and so if you believe in Chewy as a company, by all means, invest your money how you would like to invest it. But with that, everyone, thank you so much for taking time to view this video. Please take a moment to like it and subscribe to my channel if you want to see more stock reviews like this. And with that, I hope you guys have an amazing day. Bye.